The most important asset in this life is not money. It's not even time. The most important asset is attention. Wherever the attention is the value creation. Wherever the attention is, there is the price appreciation. And we see the exact same mechanism happening again with Aerodrome. Have a look at how much attention the recent Aerodrome videos got on this channel. Not so long ago, Aerodrome videos tended to perform pretty much like an average video. So the average video is the area in gray, and this blue line, that's the performance in terms of views of that particular video. So here's one Aerodrome video, here's another one, here's another one, and here is another one. All of them were pretty much just average performers. This one was just 2 months ago. But have a look at the recent video published 1 week ago. Suddenly, a lot of people are paying attention to what's going on with Aero. And surprise, surprise, attention correlates with price movements. Aero has been going up 48% in the last month. It's currently at $1.32. And where does all this attention and all this price appreciation come from? It's from the news over here. Coinbase is integrating decentralized exchange trading with their application. So regular Coinbase users can suddenly trade any token on the base chain via the Aerodrome platform. That's at least planned. It hasn't launched yet. And of course, that integration will lead to future usage of Aerodrome, new fees that are generated on the platform, etc. And so here's the Aero price in US dollars on a regular linear scale. This is how most people look at crypto prices. I personally prefer to look at logarithmic scales. Then we see the price shifts over time in a much more precise manner. But really, a lot of the price development of any cryptocurrency is dependent on what Bitcoin is doing and what Ethereum is doing. The general macro, the general capital flows do matter. And since the base chain is a layer 2 solution on top of Ethereum, especially the price development of Ethereum matters for Aerodrome. This is not just true in a theoretical way, this is true in a practical sense as well. Have a look at the trending tokens on the base chain. Pretty much all of those tokens are traded versus wrapped Ethereum. So the liquidity pool is the altcoin on the one side and wrapped Ethereum on the other side. And so as Ethereum is going up, automatically, without a single trade ever happening place, the altcoin is going up to the same degree. So the ratio between the two assets determines the price, not the US dollar demand. Ratios are incredibly useful for crypto. What we see over here is the total value locked, so the capital that's currently on the base chain over time. And this is growing quite consistently. This is very positive for Aerodrome as well, right? Aerodrome is on Base. Base is a layer 2 on Ethereum. When there's more money on Base, then the leading decentralized exchange on that blockchain, of course, benefits quite directly. But again, this is the US dollar chart. Have a look at the same in Ethereum. Then we get to this chart over here. Now the growth is not that clean anymore, right? It seems like there had been a peak at the beginning of April of this year at 1.5 million ETH, and that went down to 1.1 million ETH, a drop of more than 30%. Still, a rising tide lifts all boats. And so when Ethereum gets enough demand, Aerodrome as an extension benefits from this. What we see over here is the demand by Wall Street for Ethereum. So in blue, it's the Ethereum ETF, and in green, it's the strategic Ethereum reserve companies. So a lot of new companies that are now acquiring Ethereum in a similar fashion as Michael Saylor did for Bitcoin with MicroStrategy. And so really, if we want to find out the idiosyncratic performance of Aerodrome, we can't just look at the US dollar price. This chart is not that valuable. We have to do the same exercise that we already did for the total value locked on the base chain. We have to divide the value by the value of ETH. And then we get to this chart over here. This is now Aerodrome divided by the Ethereum price. And yes, the Coinbase news have helped the Aero price. Aero outperformed Ethereum by a bit over 50%. But just have a look at the potential supports and resistances. Yes, those are simply lines in the sand, and the price doesn't have to respect any of those lines. But still, if enough people look at charts like this, then the supports and the resistances can become self-fulfilling prophecies, right? If enough people think that an asset is cheap, then people might just buy that asset or might stop selling it. If enough people think an asset is expensive, then of course there's less buying pressure and more selling pressure. So whatever most people think will happen to a token is then in the end what's likely going to happen with that token. And so that's why I don't like that we are that close to potential resistance. Yes, we could see another rally, and that would bring the outperformance of Aerodrome relative to Ethereum to roughly 30%, but we could also go back, and that's probably more likely, to the support and then hit minus 35%, potentially in the worst case even minus 55% if we hit the low of July of last year. The fundamental question really is Aerodrome currently rather cheap or rather expensive if we compare this with other decentralized exchanges? If we just take today's numbers without the integration of Coinbase, then Aerodrome is definitely very, very expensive. It's not yet that obvious when just comparing market caps, but let's look at relations again. So we've got Aerodrome with 1.2 billion of market cap, we've got Jupiter on the Solana chain with 1.5 billion, and we've got Uniswap with 6.3 billion. Uniswap is on many different chains. Let's ignore Hyperliquid for now because this is a decentralized perpetual futures exchange. So that's a quite different beast. We are trading very different assets over here. So let's look at Uniswap and Jupiter as a comparison. Aerodrome currently has a total value locked of 600 million. Jupiter has a total value locked of 2.7 billion. So roughly 4.5 times of what Aerodrome has. But again, the market cap is not 4.5 times as large as Aerodrome. Jupiter and Aerodrome are very similarly valued. In other words, the market is expecting Aerodrome to catch up massively with Jupiter to at least 4x the capital it can attract. Now let's look at Uniswap. Uniswap has roughly 6 times the market cap of Aerodrome. Again, Aerodrome has 600 million of total value locked. So does then Uniswap have a total value locked of 3.6 billion? The answer is no. Uniswap has a total value locked of 6.2 billion. So again, Aerodrome is roughly 2x overvalued. It might be somewhere between 2 to 4x overvalued if the current total value locked stays flat. The market expects that Aerodrome will at least double, potentially triple from here. That's what the market is already pricing in right now. So if you're buying Aero for $1.31, you're speculating that the decentralized exchange will grow even by more than 3x roughly. And again, that's relatively speaking, right? Relative to Ethereum, Solana, etc. Not just in US dollars. If everything doubles, then of course the ratios stay the same. Since we've already compared the capital on those different decentralized exchanges, let's also compare prices. This is Aerodrome relative to Jupiter. And again, I'm not really a fan of this chart. There's a potential downside for Aerodrome relative to Jupiter of almost 60%. Here's Aerodrome relative to Uniswap. Again, there's quite a bit of downside, potentially 40%, maybe even close to 50%. The fundamental question really is how much trading activity will be generated from the integration of Coinbase? Will people use the Coinbase decentralized exchange trading that actively? Or is a lot of that trading already happening on the base chain because everybody that wants to buy those kind of tokens has already made the jump to using MetaMask, to using cold storage, etc. Or another way to phrase this question is, are there enough people that are too lazy to go over that hurdle and learning trading directly on chain? If the answer is yes, then of course trading on Aerodrome might go up massively and with it potentially the price. But again, currently what's priced in is at least an increase of already 2 to 3x. If that's really about to happen, time will only tell. Now fundamentally, there are 2 ways to make money with investing. The first way is to just bet on long-term adoption and to bet on monetary debasement. So that's the idea of dollar cost averaging, right? We buy into Bitcoin all the time. We just bet on the long-term growth chart. For example, had you bought $1,000 worth of Bitcoin every month for the last 5 years, so you held Bitcoin for more than a single cycle, then you'd now have $213,000 worth of BTC, and you outperformed the S&P 500 and the gold market by more than 2x. The reason why such an approach works is because more and more capital long-term flows into the asset. So more people buy the asset without the intention of selling it. More and more people just buy the asset in order to preserve purchasing power. This works with Bitcoin. It also works with the property market. It also works with the stock market. People don't necessarily buy those assets in order to flip them quickly. So have a look at the number of wallets that own at least one Bitcoin. This tended to go up long term. This growth has stopped to a degree 2 years ago, but now we've got Wall Street that instead buys the Bitcoin. So there's still long-term adoption and thus Bitcoin price appreciation. The treasury companies, they never sell, and the ETFs also rarely sell. There's only very few instances where we see net selling. We really have to zoom in to see those kind of events. So that's approach number one, right? We bet on adoption, we bet on further capital accumulation, but then there's also approach number two, and that's trying to beat the market, right? It's trying to buy low and sell high, and effectively what we're doing there is we're taking money away from the person that's not able to time the market as well in order to get outperformance. So if you want to get more performance than the average investor, we're effectively taking it away from the investor that doesn't really know what they're doing. So let's say we are using tools like the realized price, right? The average cost basis of the market, and we buy much more Bitcoin whenever the current price is below that realized price. Then of course we are buying when everybody is very skeptical about crypto and Bitcoin. We are in a way doing a contrarian bet. Nobody wants to buy Bitcoin, so we do. The same is true when Bitcoin is high, right? For example, here, the CBBI indicator, we want to sell when this is rather high, when everybody is hyped about Bitcoin, when everybody thinks that Bitcoin will go to the moon, and the rally accelerates. That's when we want to potentially exit. We are not yet at those extremely high levels. But again, we always want to do the opposite of what most other people are doing. Because that's the way to make money in crypto, right? The minority is able to beat the masses. The masses tend to do the wrong things. Only the people that do the opposite of what most other people do, they accumulate above average returns. If you do a 2x on top of just buying and holding Bitcoin, then you basically took all the money away from somebody else, or you took 50% away from 2 other people. You get the gist. And so that's why I like the crypto market. And that's why I don't speculate, for example, on the currency market, because the currency market is extremely efficient. It's got all kinds of quants and hedge funds working for it. It's a very large market. It's incredibly hard to beat. When we are taking money away from the people that aren't as smart in the market, we're basically seeing all the other market participants as competitors. And we want to have very weak competition, not strong competition. We don't want to have the Einstein hedge funds as our competition. That's why the currency markets are very poor for active speculation for the average person. And the same could be said potentially for the stock market, right? The stock market also tends to be somewhat efficient. Before my time in crypto, many years ago, I was actually a professional poker player. I paid my study fees, my private tuition with the earnings from poker. I lived from poker several years. I used to live in Gibraltar at the time. With poker, I learned that it's not just the skills that matter. It's not just about calculating probabilities and reading tells, etc. It's also about who you're sitting with at the table. If the table is only made out of sharks, it's only made out of other professional players, then there's no money to be made. But if you're sitting at the table where all the other players are just beginners, then you don't need that much skill in order to beat the game, in order to make money. And it's the same concept here for speculation. If we want to outperform the average investor, we better participate in assets and in markets where we're mainly sitting at the table with fish, not with shark, right? We want to be in a soft market, in an inefficient market. And so here is where I see the inefficiency in crypto. Crypto as a whole is already comparatively inefficient, at least in relation to the currency market or to the stock market. But really, the main inefficiency comes from token dilution. For example, have a look at this. The Ape token has a lot of token dilution. Here is the number of Ape tokens over time. 3 years ago, this was at 284 million. Now it's at 908 million. There's all of those new tokens that get issued all the time that goes to the insiders and to the team and to early investors, etc. They get new tokens and they dump those tokens on the market. And this is not a new concept I'm talking about just recently. I even talked about this specifically for the Ape token just a few months ago. Have a look at this video. How solid is the ApeCoin rally? This was published 9 months ago on the 22nd of October. At the time, the price was at $1.57. And here we are today at 63 cents. We had a massive rally in the Ape price at the time, but relative to Bitcoin, Ape went down massively afterwards because the rally was triggered by some news event, right? People got very excited about Ape and then the insiders dumped very quickly. It's something that's not really surprising. This is an underperformance of 78%, and this is one sign of market inefficiency, right? If everybody is buying into a rally, despite the terrible tokenomics, that's an opportunity to make money. We're not buying Ape, we do the exact opposite. We are selling Ape that we don't have. We are shorting the Ape token. In other words, we make money whenever the price loses versus Bitcoin, Ethereum, Solana, the major cryptocurrencies that tend to appreciate over time. Now, ApeCoin is just one example. The whole altcoin market has this problem, and the problem is massive. It's a structural problem that won't change anytime soon. Have a look at the value of the token unlocks of the newly hitting tokens that come to the market every single week. It tends to be at around 1 billion per week. $1 billion of tokens need to be purchased every single week just for the altcoin prices to stay flat. Now, the counter argument is that all cryptocurrencies are inflationary to a degree. Even Bitcoin is. But compare this with Bitcoin. Bitcoin's inflation rate is at 0.83%, and that is per year. The market cap of Bitcoin is 2.34 trillion. So when we multiply the numbers, we've got potential sell pressure of 373 million per week. Roughly 1/3 of what the altcoins need to be bought at. So Bitcoin has less selling pressure, and at the same time we've got all of the supply absorption by the ETFs and by the Bitcoin treasury companies. And so when there's an asset that's less inflationary, that has less sell pressure, and at the same time has more buying pressure due to Wall Street, then of course that asset has to outperform. And historically we have exactly seen that. Since beginning of 2022 to today, the Bitcoin market cap relative to the others market cap, so the market cap of the smaller altcoins, has gone up by 291%. But this is actually underrepresenting the problem, because this is again just comparing market caps. But the prices tend to go down for the altcoins much faster because of the token dilution. So let's say we've got an altcoin of $1 billion of market cap. Now we double the amount of tokens, and thus the token price gets cut in half. The market cap would still be the same, right? The token price went down by 50%. The market cap is unchanged. So the underperformance that we get from the token dilution isn't even presented here in this chart. This chart just shows how long-term people are exiting the altcoin market in favor of, in this case, Bitcoin. But the chart relative to Ethereum and relative to Solana looks pretty much the same. Here's another example to show the difference between price and market cap. This here's WorldCoin. WorldCoin supply went from 522 million to currently 3.8 billion. So roughly a 7x in the supply in the span of just 2 years. The WorldCoin price is close to all-time lows. The WorldCoin market cap is quite close to all-time highs. It's not that close to the low. Again, the market cap can be rather stable while the price is crashing. Again, the market cap can be rather stable while the price is crashing. So really, you're getting the return of the price, not of the market cap. And that's why most retail investors lose over time. Have a look at Bitcoin relative to WorldCoin. It's just going up. Or have a look at Bitcoin relative to Ape. It's also just going up. And this is, I believe, the key to making money in crypto. It's to take advantage of that inefficiency. It's to make money with all of that marketing dollars that are spent by the team, by the early investors, to attract other retail investors to buy things like ApeCoin or WorldCoin. So then a lot of liquidity is in the token that then the insiders can dump on that liquidity. But we can make money from that dumping simply by betting on falling prices of ApeCoin or of WorldCoin, at the same time betting on rising prices of Bitcoin, Ethereum and Solana. So we're playing exactly the delta of those two assets. That's why we get this long-term appreciating trend. I just took those two examples over here, but again, this is a structural problem with the altcoins. The selling is much, much higher than the market can digest. It's even higher than what we have for Bitcoin, as we've already discussed. I'm making money with those relative valuation bets already for more than 4 years. And had I just dollar cost average into Bitcoin, I of course still would have made a lot of money, but because of the relative valuation bets, I didn't just get the return that's indicated here by the gray line, I got the return that's indicated by the black line. So this is something I'm doing already for a long time, quite successfully, quite consistently. And recently I even started a capital pool for the premium members where I execute exactly that strategy. And so far, after 1 month of trading, this is already bringing us annualized 74%, very consistently with a maximum drawdown so far of 2.6%. So really, I don't think that the edge in the crypto market is to find the next 5 or 10x altcoin. I think the edge in the market is to simply continuously, quickly grow the capital with little volatility, but to use the market structure to our advantage. With a random meme coin gamble, we can only invest a few hundred, maybe a few $1,000s. But when we actually have consistent growth with not that much volatility, suddenly we can invest much more capital, right? Investing a lot of capital into Bitcoin feels much better than investing a lot of capital in a small meme coin, right? We can deploy more capital. Thus, even if we don't have 10x returns in the span of a few days, it doesn't matter. If we've got above average returns consistently, if we've got a high Sharpe ratio, we are okay. Now, unfortunately, due to extreme demand, I had to close deposits for the copy trading pool. There will be a new capital trading pool starting at the beginning of next year, but right now I simply trade with the capital that I got from the members. But you can still manually copy trade me. For example here, right? This was the WorldCoin short. I bet on falling prices of WorldCoin and on rising prices of Ethereum. That was on July 23rd. And so many premium members simply copy trade me, right? There is quite a lot of gains to be made in those individual transactions. But it's not about the individual transactions, right? It's about the long term. It seems like quite complex, right? We go long one thing, we go short the other thing. It also sounds quite risky. But really, in the end, if we set this up properly, it's not that risky and it's also not that complicated. There's really only 2 videos to watch. It's this one, using perpetual futures on Hyperliquid, and here this one, probably even more important, risk management with relative valuation bets. It's only 1 hour of content. After this 1 hour, you know exactly what to do in order to get performances like this. And you will also know what to do in order to just copy trade whatever I do, so that you get the same kind of returns that I do. So really, just watch this video and watch this video, and you're good to go. I'm not going to read it out in this video, but feel free to stop the video and read the feedback that I get. It's always nice to get this kind of feedback. If for whatever reason you do not like premium, then just message me within the first 7 days of signing up and I refund you the fee. It's currently $125 per month. If you don't like it, you'll just get that money back. Just message me. A link to premium directly pops up over here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.